Good morning, it's Harvey Jackson. Just going to go through the news here again today. I missed Friday, but apologize, but let's just get through this here. So, the Strait of Hormuz is being asked to get secured by Trump here, but I thought that I'll cover this story here first because Trump and Xi are due to meet at the end of the month here, and they're talking in Paris right now, the trade. So Greer and Besant are talking, and both sides are going to be talking about agriculture goods and everything else. So, and they're leaving the decision to get made by Trump and Xi for their face-to-face meeting. Trump demands others to secure the strait, just like I said in the title here, but he's looking for a coalition. And this kind of just makes sense and kind of follows the theme of, hey, we're going to take out the targets, and U.S. isn't affected by the shortage of the oil, but some of these other countries that have some military, they can actually secure the strait there as well. India, or I think India and a couple other countries are already sailing through the strait with the permission from Iran. So Iran still controls the strait for sure. Uh, Oil rises on the tax on the Middle East export facilities. So that's the they hit the Karg Island, and then as a retaliatory measure, Iran has been targeting some of the other oil facilities and oil countries. So Karg Island, just as to kind of point it out here, is this little island way over here, and apparently it's like 90% of all the oil leaves that area, and they sail through. But that's where 90% of the Iranian oil is shipped through. And just prior to the weekend, Trump hit some of the Karg Island munitions areas and some of their targets to eliminate some of the military in there. Uh, change uh, Change gears here. So canola crush capacity utilization this week was at 91%. Last year to date so far is at 93%. It's outstanding. Just shy of 7.5 million metric tons crushed. We're definitely on pace to get to our 12.5 for sure. Here at Great Lakes, you can see that below the red line, it is definitely uh, uh, showing some bare spots on there. There's only 20% ice cover, but it's where the ice is thin and the locks that are important. So probably another 3 weeks before you probably open up the seaway to be able to get water through or grain through the east going east here. Uh, just quick look at the markets. Canola down $5.60. Rapeseed is down 7. Soybean oil is down a penny, one penny 17 ticks. It's at 66.27. Canola was at 7.34. Crude oil is down 95.86, so down nearly a whole dollar. Soybeans are down 33.5 cents. Soybean meal is down as well. Spring wheat is down 7.5 cents, and your Chicago wheat is down 9, and Kansas wheat is down 4. Corn down 5. So it's a red day on the markets for sure. As you can see here, we're still above that short-term trend line, but basically starting to chop sideways here. And you can see these 200-day and short-term moving averages starting to meet here. So your November contract still above that short-term trend line. Your European rapeseed has pulled back off of the highs that we made back in early last spring. So the price differential between European rapeseed and canola is at $58. So we're back in this range where they could be selling to us probably. Soybean oil above the trend line still, even though we've got a few red days in there. Soybean futures with that long candle today, we're basically broke the uptrend line, but we'll have to see how it trades as the market evolves today. Palm oil, nice uptrend. Here's your crude oil. The highs that were made last coming out of last weekend, we're still in an uptrend. Same thing with diesel fuel. So when we look at the complex, so you get your diesel fuel in New York Harbor, diesel fuel in West Texas, and then your soybean oil, soybean meal, and canola are all down in the lower percentages of move up versus the near 40 to 50% move up in the crude and diesel fuel futures. Canadian dollar, short-term moving averages, and this pivot trend line, it's still trading above it. U.S. dollar is up against this 100 index, so it's See if it can trade through there. It's red today though. Your gold futures above the short-term trending or trading moving average. Same with your silver. Have a quick look at wheat. Consolidating. You can see that it's done this a few times, but consolidating, going sideways here. If you feel undersold, this is definitely a place to get some sales made. Still would be targeting that $8 mark for both old and new. But for new crop, I'd be targeting that $7 futures first contract. So there's a few out there. G3. I don't know if G3 is actually doing it, but Cargill and Bunge definitely does it. So with the cost at times. I don't know why, but anyway, here's your Kansas futures. Nice uptrend. Same thing with your Chicago. Your French milling wheat is above the 200-day moving average, and some support there. Corn above some of these shorter term. They still got lots of resistance before it can ever get back up into this $5 area. I'm going to say it's more like $4.95 area, but we do have our planting poll that's being done in the U.S. that will be out at the end of March here as well. Quick look at the meats above the 200-day moving average. That seems to be adding support. There's a few analysts out there talking about if crude oil does get to, say, 125, you're going to lose this market because of affordability. Same thing with the feeder cattle. So there's caution to be made right here as well. Just holding above that 200-day moving average. And where the money is going to go is maybe to support some of the cheaper red meats. Class 3 milk futures. And that's all I have for you today.